do you have the right expectations for that system, or are you just trying to cram other expectations on a system that just isn't going to perform that way?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question from a trader, and the question is, how do I become more consistent? I feel like I don't have the right entries for my trading system.
Why don't you explain what you're talking about a little bit earlier?
Yes. Yeah, we were just talking about this offline. Well,
yeah.
So I think what happens is we confuse as traders, consistency with win rate, right?
Yeah.
And so we feel like it's not a good, and I'm totally like, I did this for a long time. So I was always trying to get a better win rate. Now, what traders think initially is that you're going to find that through your rules, like your entry rules in particular. I think that's not, there is some truth there. There's definitely like some entry rules are no good. Some of them are really good. All that's true. However, I think if you really want to tweak your win rate, the fastest way to do that is to work on your exit rules. So a higher win rate would be associated with a trailing exit that's super tight and really close to price. Mm-hmm. Also, a higher win rate would be associated with a hard target that's super easy to achieve. So is it easier for the market to go, if you have 100 pips of risk on your trade, is it easier for the market to go 50 pips or 250 pips?
Mm-hmm. Yeah.
Well, we know, right? It's 50. Yeah. So you can reduce your reward risk ratio, and that will up your win rate. The problem is, obviously, then execution becomes really important. If you mess up execution, it's a bad thing, because it will really eat into those lower win rate strategies. And so those winning trades that we're making, 5 pips, if they're making 4 pips, that's a big deal for scalpers and things like that. Yeah. So I think really what we want to get at is the root of the issue here. For most traders, when they say they want to be more consistent or they want a better entry, what they're really saying is they want a higher win rate. Mm-hmm. And I would ask, why do you want a higher win rate? What is it that you want to do? Do you want to make money? Or do you want to pat yourself on the back and say, I've got an 80% win rate? Yeah. And most traders go, well, I want both. I've seen a few systems that have 80% win rate and 3R and all that, but they trade very infrequently. That's almost the defining feature of those strategies, is that they rarely ever throw up a signal. So I think in the end, and most traders come around to this, I think the longer you trade, if you can work on yourself and get used to losing and understanding that losing is a big part of the game, learning how to lose, especially currency trading, is a big part of the game. If you can learn how to do that, like stock traders, I feel like have it easy. Like sometimes I think I want to come back as a stock trader, and maybe I should, because they almost always just buy, right?
Yeah.
So most of them don't even think about. I mean, I know some do, but most stock traders just buy. And so the question is, when do I buy? Like that's their only question, Where it's so different to currency trading. But I like the currency market charts much better, so that's why I don't. They're nicer, I think, smoother, fewer gaps and stuff. So what do you think about this? Why do people say that they need a better entry or that they want to be more consistent? Well, what's going on here?
Yeah, I think it's a lot of it is, like you say, expectation. I think another thing to look at is people want to win every single month or every single week. They just if they don't do that, then it's a failure to them. But like you said, some systems are gonna draw down like 2-3 weeks in a row, and then you hit a 50% week or something, and then you make it all back, right? So I think that it really is about your personality, what you can tolerate as far as a drawdown, and then just the system that you're using. Do you have the right expectations for that system, or are you just trying to cram other expectations on a system that just isn't going to perform that way? And I think it does come down to the mindset, the mental toughness. Can you come back from a drawdown? Right. I was talking to my trading buddy last week, and he drew down like 5% and he was freaking out. I was like, dude, you got this. And then he came back and he made, he was only down 1% at the end of the week. And he was like, yeah, I just need a little bit of confidence. So I think part of that is just the confidence you have in yourself and your system, right?
Yeah. It's amazing how quickly, you can lose it. and how important it is to have things in place that enable you to build it back up, like processes that you can use. I had a friend who traded the lower time frame charts, and he would consistently make money, and then once in a while he'd have a terrible loss. So the way he did it was he would pull out his money every day. So he never had a lot in his account. You know what I mean? So when those big, terrible losses came, a lot of that has to do with the way that he manages risk. But, there are things you can set up. Like if you're in a drawdown, do you just get away from trading, or do you do lots of testing on the strategy that you're having questions about, and, and present that to your logical brain, go, look, this is, how this system has worked, and also knowing, I'll put in the show notes the risk calculator for people interested in that. Like that risk calculator helps you too, because you go like, well, of course, I have an 89% chance of having a 15% drawdown. So once you know those numbers, a lot of traders don't know that. Like they don't know that they're on the path to that, sort of drawdown because of the way that they've set up their strategy.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So yeah, it's a bit tricky, isn't it? And I think, what you're saying is true. It really comes down to expectations, and I think management of the situation when it comes up, because it always comes up, right? Yeah. It always comes up where you're going to question and go, what's going on here? Because the ultimate question for traders, is it the system? Is the system broken? Have the markets changed? It's all the same question, right? Or is this a normal process? Like this is a normal drawdown. Or if you can answer that, right? Yeah, exactly. Yeah. Is it your mindset? Yeah. Like, how do you know? Is it, okay, my system's broken. The markets have run away from the strategy. It's not going to work anymore. Like the classic would be if you had a mean reversion system and it's in a super strong trending market. That would be like we'd go, wow, like that would make you double, and it will come back eventually. But those are the times when you're just like, whoa, because you're gonna take it on the head. Yeah. If you're trading that market, it's a runaway train, right? Yeah. But yeah, it's really tricky to disentangle. Is my system broken? Are the markets changed? Is it me? Am I doing something weird here? Like, am I not following the rules? Am I doing something off? Or is this normal? Is this a normal drawdown? And I didn't realize that my numbers work out this way, which is why I mentioned the risk calculator, because that can help you along that. And so that's helped me a lot, helped a lot of traders who are just like trying to answer that question. And some of them don't realize how like their 30% drawdown is completely normal. Like they just had no idea, Yeah.
So what do you think about this idea of setting goals? Like I tell people I work with to set goals, at least for the year, so that you kind of have this expectation of what to shoot for and what to expect in your trade, or what to look for in your backtesting, right? What do you think about setting like a monthly or like a yearly goal? Is that helpful, or is it more of a hindrance, do you think?
So what I like to do is I like to split it up. So I have multiple accounts for multiple goals. So that's how I do it. So I have like fairly aggressive small account, and I have a medium, and then I have a pretty large, consistently, blah account, right? Yeah. And so that's how I do it. And I think the problem with goals, I think goals are great. However, here's the issue. I think we get stuck when we say, okay, I want to make 10% a month or whatever it is. And then as soon as you hit 10%, you turn off the switch. Okay, what's going to happen is your average over the year is not going to be 10% because you've never allowed yourself. It's like a profit target. If you have a 2R profit target, you're never going to get a 20R win, right? And that's the same thing with goals. So if you, it's not the goal that's doing it. It's the rule that, okay, when I achieve X goal, I stop, right? So I think that's the tricky part, because that's going to pull down your average. So if you want 10% a month, and every month that you hit 10%, you stop. Well, what about those months when you lose 1% or 3%, or you only make 5%? Your average is going to come down to 6.5%, 7.5%, right? So that's really the issue, I think, with goals, is that I think you should reward yourself and all that. That's great, especially for execution goals. But In terms of returns, I think the tricky bit is making sure that you don't cut the fat tails off of your distribution. You know, you want to have
a minimum,
those,
not a maximum, right?
yeah. And you can reduce risk and do all that stuff if you want to. Fine, whatever. You know what I mean? To maintain it. Like if you're risking 3% a trade and then you hit your goal for the month and you're like, well, I've got 2 weeks to go. Okay, maybe now you risk 1.5% or something, you know, so you don't hurt. You can do things like that. So yeah. What do you think about goals? I mean, when people say,
I agree. Like, I think that it depends on the system also, right? If you're going to be a day trader, then okay, maybe a weekly goal makes sense or a monthly goal. But if you're going to be like a swing trader, then that's the kiss of death, basically, because you can't expect a position trade or a swing trade to set up every single week. So you might want to have a quarterly goal or a yearly goal. And I think that's really important for backtesting. But like you said, you don't want that to be your limit. You want that to be your floor that you're shooting for. And then everything else is gravy, right? Because you're going to have some losing months.
Yeah, so you've got that distribution of months, and you just if 10% or whatever the number is your target for that account, then you just know you're gonna, you know, most time it's gonna be over or under, and then it'll average out, right? Yeah, that's right.
Exactly.
Yeah.
Okay, cool. Thanks,
Thanks.
Walter. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.